Investors and traders, welcome to the channel Market Chart Pattern. In today's video we are going to take a look at the banking sector through the eyes of the Spider Select Fund Financial ETF. We will also be taking a look at the major US financial banks, so the big ones. We will be looking at and identifying key pattern formations, key resistance level, and possible support levels. So this video is for educational purposes only, and it is not a financial advice. Okay, so what we are looking at is a weekly chart, so it's longer term chart for the financial sector, so XLF. It will have a number of the banks which we will take a look at on individual basis. So what we are looking at is basically the market which had risen a lot from the lows back in March of 2020, so the COVID lows, and right to the January 10th 2022, and with the broader market it has been coming lower, and then we have seen a rally, and this rally actually went right up to the 61.8% Fibonacci retracement of the highs back on the 10th of January 2022. And what we have seen is basically we saw a wedge formation taking place, and you can also say that here it is like drive 1, drive 2, drive 3. Not necessarily 3 drives to a top pattern, but there were 3 pushes higher, and then there is like a really small micro double top here on daily basis, and then on Tuesday 21st of February, it's a weekly chart, we saw the wedge pattern breaking, and now we have seen a sharp move lower. We know that the 16th largest US bank, the Silicon Valley Bank, has gone belly up, it's gone under, and that happened pretty quickly. So I just did a video in which we looked at the regional level banks by looking at the ETF. KRE is the symbol, so please do watch that video. I'll also try to put a link. And this one we are taking a look at our broader major ones as well. So it looks like since this support was taken out, 33.15, which was a weekly candle of 19th of December 2022, the ABCD formation, and then we have this 61.8% Fibonacci retracement coming right at the structural highs around $26.80 level, and the ABCD is a little bit lower to about $25.21. So it looks like we might be heading down here to this ABCD right to the 61.8% Fibonacci retracement, where we are looking at for a possible support. Okay, we don't know whether this support will be held or it will be reached or not, but it looks like in this pattern formation, that's where the market is probably heading, and it would be a good level to take a look at and see if the market is going to find some support, or it's going to break that level, or it's going to consolidate around here. So this is what we're looking at in the ETF XLF. Now let's take a look at a major bank, JP Morgan. So the JP Morgan chart is actually pretty interesting. These are the COVID lows back in the March of 2020. We have seen a really nice rally taking place, which took the stock, the stock doubled in price, so pretty impressive in that way. And what we have seen is a head and shoulder formation take place. There is a bigger head and shoulder in play as well, so you can say this is a left shoulder, head, and right shoulder. However, when I look at head and shoulders, I'll also look at the symmetry between the left shoulder and the right shoulder, so they need to be quite symmetric in terms of timing, which I don't see yet, but it's possible that over some time we'll be able to actually get that pattern as well. However, what we are really looking at is this stock actually declining really strongly from 25th of October 2021. In fact, this is a little bit different to the XLB, which topped on the 10th of January 2022. So it topped earlier, and then what we have seen is a decline right between the 61.8% and 78.6% Fibonacci retracements. And in fact, this price came very close, about $4 to the 78.6% Fibonacci retracement. However, there was also a 3 drives to a bottom pattern here on weekly basis. On daily basis would have been possible to actually narrow it down a little bit. We have seen a rally higher, and the rally seems to have terminated right at the 61.8% Fibonacci retracement. So I'm just going to draw this like here to point that out, that this is the 61.8% retracement. I'm just going to make this smaller. There we go. And what we're looking at is that perhaps if this is not taken out to the upside, this could be a strong resistance level, and we are already seeing some rounding here. Then what we could have is possibly a move lower right to the 78.6% Fibonacci retracement, which is around 97.50, all the way back down to the COVID lows as well. So that's also a possibility. If we just look at the ABCD formation, if that were to take place, yeah, so that is also kind of pointing towards the retest of the COVID lows. So this is what we are looking at for JP Morgan in terms of the possible support, shorter term, in my opinion. Let's see, let's look at our favorite 382. So you can see that the support came in right at the 38.2% Fibonacci retracement, and also we had some structural support here. So what is really important is whether this 382 here, that's give way or not. If this gets broken, then the lower prices scenarios, even the retest of the COVID lows becomes more likely. Let's take a look at Goldman Sachs. So the Goldman Sachs pattern is quite interesting. Just like the JP Morgan, we have seen a huge rally ever since the COVID lows, then a retracement. The retracement went to about 50% of those lows to the high. We have seen an ABCD formation here. It's not a perfect ABCD, but wait, hold on. So this ABCD actually, it's just an extension to 1.272. There you go. So the 1.272, and then we also had the 78.6% Fibonacci retracement giving us a confluence level. The price didn't quite reach there, but it was in a it was close enough in a dollars level on a $380 stock. So that's, take out the percentage, it's quite negligible. And also what we are looking at is a pattern formation in which on a weekly basis the market has taken the lows out of the 23rd of January 2023. We think that this ABCD formation is in play, which could actually take the stock down to about $245 level, which is the ABCD plus the 61.8% Fibonacci retracement. Also we have this confluence level coming in from the structural support, and there is a confluence of many things, so that could perhaps be a pretty strong support. So I'm just gonna write strong support. I'll put a question mark on it, and then what it is basically 61.8% retracement, and AB equals CD, which is just 1-to-1. I'll just write it 1-to-1 AB equals CD plus structure. Okay, so that's why I think could be a strong support. After this one, let's take a look at the Bank of America. There we go. So the Bank of America one is pretty interesting because based on our pattern formation, this stock is actually weaker. So just like the other banking stocks, it had a huge run ever since the COVID lows. It broke this trend line here. It retraced only to the 38.2% Fibonacci retracement. So that's a key thing to make a note of. I'm just gonna make a note of here 0.382 retracement, because what it means is that this stock is actually weaker. It is actually weaker than Goldman and JPM. And what it has done is basically it has tested this support coming from 61.8% Fibonacci retracement at the $30 per share level 3 times. And last week actually it moved lower here and a pretty negative close to the candle. So it looks like it could be moving lower, and the next level of interest will be $25 per share level, where it is the 78.6% Fibonacci retracement. But it's also likely it's going all the way back to its COVID levels of about $18-19 per share. And the reason is that if this stock is this weak, if we look at the ABCD, it takes us right at this COVID lows. If in fact this pattern is in place and this 38.2% Fibonacci retracement is not taken to the upside. Okay, so let's take a look at the Wells Fargo. So guys, quite a long time ago, beginning of January 2022, so the beginning of January 2022, I had done a video on Wells Fargo. We were looking at a pattern formation which is in this shaded region, and I will actually put a link to that video because very interesting to see how these pattern formations play out, especially on these longer term charts. We were looking at this level of around $57 to about maybe 57 to $59 perhaps. There were a number of confluence levels coming together for as a possible strong resistance. So in fact, when the market did go down, however, it found support in 3 weeks. It went higher. So about maybe $2 to $3 region on a $60 stock at that time. So it did go a little bit up, but ever since it has not looked back, and it's never crossed that level again. So this is pretty interesting. And now what we see is that just like one thing to point out about this bank compared to the other ones is that, look guys, this had a low of 26th of October 2020 is the low, and it hasn't taken the highs out, which were back in 16th of Jan 2018 perhaps. And so that just tells you that this stock is actually, in terms of the bigger banks, weaker. Then if we look at it just retraced about 50% of this decline, and looks like it's going to 78.6% is possible, perhaps around $30 per share. The ABCD takes it even lower to $26. So it's possible that there is on a retest of 61.8%, there is we find some support. However, what is really important is to see the quality of the rally, if there is going to be any rally, and if these levels of 50% are taken out to the upside. Looks quite unlikely at the moment, but the pattern formation will take us down to anywhere about $30 to about $25 and a half, with the possibility of even reaching the COVID lows, just like we have seen in some of the other banking stocks. So the last one we are going to take a look at is Morgan Stanley. Alright guys, so the Morgan Stanley stock looks pretty interesting because the chart looks more constructive, especially compared to the Wells Fargo. Here what we have seen is basically the stock topping around the February of 2022, so a little over 1 year ago. We have seen a rally. The rally has actually faltered between the 78.6% Fibonacci retracement, and also we had this some pattern formations here. So, and there was this gap, it got filled. Looks like now the stock is, let's see if it has broken, is 38.2% Fibonacci retracement, and boom, there you go guys. These 38.2% retracement, the stock actually closed right at this level, but it's a pretty negative candle, so this support might not hold. And if this pattern breaks, then what we are looking at is an ABCD formation taking us down to about $63 and a half, and the 61.8% Fibonacci retracement is coming around $60 per share level, also with the structural support here. So it's possible that the stock actually goes here. Let me just draw this shaded area just for our reference, and here we go. So maybe something visually easy to see. So this is what we are looking at, the main banks, and it appears that there is perhaps stress in the banking sector with the regional banks. Watch the video I did earlier on, being under more stress, but we have also seen some of the major US bank index being sold as well in the markets. So this is what we're looking at. If you like our analysis, how we look at the key pair informations using Fibonacci and market structure with ABCD, do subscribe to the channel. If you like this video, apologies getting long, and then do subscribe to the channel, like the video. It just helps me to find out if people like the work I do, and encourages me to keep on making more videos. So thank you very much. Good luck and good trading.